Ever wondered how banks are able to lend out more money than they actually hold in deposits? It's an intriguing question, isn't it? The answer lies in an age-old banking system known as fractional reserve banking. Fractional reserve banking is a system whereby a bank keeps a fraction of the total deposits as reserves and lends out the rest. This might sound a bit complicated, but think of it this way. Imagine you're running a lemonade stand. You make a big jug of lemonade, but you only sell cups of it. You don't need to have a full jug for every cup you sell, just enough to refill the cups as they're sold. That's the essence of fractional reserve banking. In this system, banks operate on the assumption that not all depositors will demand their money back at the same time. This allows banks to lend out more money than they have on hand, which in turn stimulates economic growth. It is, in a way, a delicate balancing act. However, it's important to note that this system is not without its risks. For instance, if too many people demand their deposits back at once, a phenomenon known as a bank run, the bank might not have enough money to cover these withdrawals. This is where central banks step in, providing a safety net for commercial banks through lender of last resort facilities. To recap, fractional reserve banking is a system where banks keep only a fraction of deposits as reserves and lend out the rest. This system allows banks to create money through lending, stimulating economic growth. However, it's not without its risks. As a sudden demand for withdrawals can lead to a bank run, central banks mitigate this risk by acting as a lender of last resort. So, the next time you walk into a bank, remember that the money you deposit doesn't just sit in a vault. It's put to work, stimulating the economy and creating more wealth. But also remember, the system that allows this to happen is a carefully balanced one, always walking a tightrope between risk and reward. And that, in a nutshell, is the concept of fractional reserve banking. It's an intricate system, full of nuances and complexities, but at its core, it's about making the most out of the money we deposit in banks. It's an essential cog in the wheel of our economic machine, a system that, despite its risks, has proven crucial in driving economic growth and prosperity.